What's up, everybody? Welcome to Weighing Out Your Options. I'm your host, James Legends. Today, we're just going to start off by talking about what happened with the unemployment rate on Friday, why the numbers were actually decent, but the market reacted in a negative way, right? So, first of all, we have this site here where it's saying the current unemployment rate was 3.7% in August of 2022, right? So this measures the percentage of workers who want a job but don't have one, and has remained low as the U.S. economy continues to rebound from COVID-19, right? So basically, let's just take a look at the charts down here, right? So we saw obviously in 2020, we had a loss of 20.49 million jobs in April of 2020. That number then we got back up into positives by May. But however, you can look at this chart here where it actually shows you the COVID spike of unemployment. So we had a 14.7% unemployment rate in April of 2020, and that has since then been slowly dwindling away, right? So now in August of 2022, we have numbers at 3.7%. So why is this not good for the market, right? Because you would think that a lower employment rate would actually be something that's positive for the market right now. But let me explain. So a low unemployment rate can actually be negative for the market because it actually can cause inflation and reduced productivity. Basically, when the labor market reaches a point where each additional job added doesn't create enough productivity to cover the cost, there is like something called an output gap, right? So basically, we have a lot of jobs. People are working right now, but the productivity rate is not where we need it to be. There were about 315,000 jobs added in August of 2022, but this is actually bad for inflation because what this means is that the Feds actually need to tighten up the inflation rate even more. Okay, and as the inflation rate and the interest rates rather go up, this causes a problem for companies because they now need to spend more on purchasing goods, getting loans, things like that. So a higher unemployment rate actually would have been positive news this time around. They say the saying, bad news is good news. And in this situation, it actually would have been, right? It's calculated by the percentage of the eligible workforce not currently employed, right? So it's only people that are really eligible. They basically just send out a survey to all the American homes. Whoever sends it back, right? So obviously this number is a little bit lagging also because these numbers are surveyed throughout the month before, and then we get the numbers in the next month, right? So the numbers are technically a little bit lagging right now. But I just wanted to put that into perspective for people that actually a lower unemployment rate right now is actually bad for the inflation numbers, right? High unemployment is a lagging indicator that demonstrates other economic problems. It could also cause economic damage of its own. When workers aren't participating in the economy, the gross domestic product will suffer, reducing economic growth. It could also create health problems among unemployed workers, leading to increased healthcare costs down the road. And studies have shown that sustained high unemployment can also cause long-term damage to workers' earning potential and wealth. Okay, and the lowest we ever had the unemployment rate at was in 1944, when the unemployment was only 1.2%. We could also take a quick look while we're talking about this. We could actually take at all of the unemployment rates since 1929, right? So 1929, we had a 3.2% unemployment rate, and you could actually see here the notable events that we had in each of those years as the rates increased or decreased, right? So 1929, we had the market crash. In 1932, we had one of the highest here in 1932 and 1933 when we had the Hoover's tax hikes and FDR's New Deal. Right, and then depression was starting to ease a little bit. Thanks to the New Deal, we had the unemployment rate start to come down from that point. Right, and then in 1944 was the lowest that we ever had. And then we could fast forward to this area down here, right? 2008 is a notable one that most of us were around for at that point. So we had a 7.3% unemployment rate. Minimum wage was only $6.55 back then. Put that into perspective of what minimum wage is now. We have minimum wage at the moment at $15, possibly even raising to $20 within the next 5 years. A higher minimum wage is not going to help the inflation rate, right? So this is another thing that we have to think about in the back of our minds, that if the minimum wage is going up, the market might not take that as a good thing, right? Because this means that the price of goods goes up. When a company has, let's say a company has 1,000 workers. Let's just do a little math here for a second. Company has 1,000 workers that they pay each $15 an hour for 40 hours a week. Okay. And then their minimum wage that they have to now pay those workers goes up by, let's say, $3 to $5. This is a significant rise in the amount of money that they now need to spend on workers, which then gets trickled down into the cost of the goods that we purchase at the store, right? Because they're not going to keep their goods at the same price if they have to spend more money to employ people that are going to do the jobs that they need done to get those goods out in circulation, right? So minimum wage going up, unemployment, right? These are all things that we don't really think about. These are kind of like hidden in the market that nobody's really talking about too often, but they really do have a large effect on the economy and the stock market in general. All right. So I just wanted to talk quickly about that. You guys obviously know in 2020, we had the COVID-19 pandemic, the recession, right? 6.7% was the average unemployment rate that year. Then 2021, we got it back. We had 3.9%. And then in August, now we are at 3.7%. So that's kind of why, unemployment being down is actually not helping us right now, because interest rates have to be risen to accompany that, to make up for that, basically. So that's basically the gist of it. That's why the market kind of had that bearish reaction at the end of the day, or at least that's why I think it did. And now going forward, we'll talk about a little bit more about what I think the market's going to do once we get back to the premium section of the Discord. However, I did also just want to go over, while we're still on YouTube, talk to people about the earnings that are coming up this week, right? So this is actually a little bit of an interesting earnings week. Tuesday, we don't really have anything too crazy. None of these companies are really too big. We've traded Path a couple times in the Discord, and Coop is another one, this software company, right? So these two maybe we could look at. But more importantly, on Wednesday, then we have Neo in the morning. Okay, so they'll be reporting in the pre-market. Then we also have GameStop at nighttime, in the after hours on Wednesday. Then we also have American Eagle, Dave & Buster's, right? These are companies that we know the names of. The ones that we know the names of are the best ones, in my opinion, to trade as far as like earning plays go and run-ups into earnings or dump into earnings. However you see it, these are the ones that I usually look at, are the ones that we truly know the names of, right? So Neo, GameStop, and American Eagle and Dave & Buster's all on Wednesday. So that should be an interesting day. Then we move over to Thursday. We have Zscaler, which is a cloud company. We have DocuSign, which we all know what DocuSign does. We have Fuel Cell. We have Smith & Wesson, right? This is a company that provides weapons. We have Lovesac. eGain is a company that I recognize just because it's one that I've looked into for a long time. I kind of like that company for the long term. They have been taking a beating. We'll take a look at the chart on that in just a little bit in the Discord. And then on Friday, we have Kroger in the morning. And then that's pretty much it as far as like the big names go, right? So those are most of the earning stocks that I'm going to be watching for the week. And now I am going to take it over to the premium slide of the Discord, where we're going to do some charting and talk about upcoming plays. So thank you, everybody on YouTube, and we will switch to Discord.